Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of a trading signal service that we provide here. If you would like to receive trading signals from myself or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website, www.dailymarketmovements.com. What I'm going to do is leave the website link below this video in the description, so if you're interested in joining our amazing team, then all you have to do is scroll down, click on that link, which will then direct you to our website, where you'll see that we charge a very small fee of $199 for a year's membership. So great value for money. However, in front of me is the crude oil futures chart, and as you can see today, we're trading ever so slightly to the downside. Currently find ourselves trading at $38.30 a barrel. We haven't really moved much since yesterday. We're trading in and around about the same type of price. There's been a large correlation lately with crude oil and the stock market, and today we're seeing that the stock market under some pressure, trading down. I think the S&P, the Nasdaq, and the Dow are trading down around about 2 to 1.5%, and as you can see, crude oil has pretty much followed it. We were trading as high as $39 a barrel. Yesterday when we were trading as low as 37, I said to the signal team to close the sell position that we had. We made some really nice profit on that trade, so a huge congratulations to everyone who managed to profit and bank on that trade. And then, as you can see, the market has gone up. So in yesterday's video I did say we were likely to see it go and trade back towards $40 to $41, and we nearly got there earlier on in today's session. But going into next week's session, I am bullish in oil long term. I do think that it will only be a matter of time now until we do trade up to $41. I'm looking to buy these dips now. However, I'm not saying that the market's going to go down to $35 or $30, which is still a possibility. But what you should all be wary of, this goes out to all of the retail traders and all of those who are new to trading, is that we are now approaching the end of June. And June is like the halfway point of the year, which means that we're now coming to the end of the second quarter of 2020. What has happened in crude oil in the last quarter, so since we had that massive sell-off back in like mid-April, as you can see, we have traded all the way from minus $44 all the way up to $40. So that's around $84 to the upside, which is astonishing. These are huge gains. You don't normally get these gains in the crude oil market. If you're new to trading and you expect this to happen week in, week out, or year in, year out, I'm sorry to put you down, but it doesn't normally happen like this. So a lot of money managers and hedge funds will be making an absolute killing on movements like this when the markets are this volatile. So what I'm expecting to happen within the going into Monday and Tuesday next week is for these managed money firms, so the hedge funds and the banks, to actually take profits ahead of the end of the second quarter, so that their portfolios look really healthy. That their clients can log on to their portals and see how their investments are doing, and they'll be like, oh wow, Goldman Sachs has made me a killing this last quarter. So I do expect to see that going into Monday and Tuesday. So if we do see some down pressure down towards $35, I would not be surprised. But any dip that occurs in the crude oil markets at this moment in time is to be bought. Economies around the world are starting to reopen. Europe is doing very well, reopening with its economy. The US is slightly behind with its uptick in coronavirus cases, which is a worry for the demand of oil prices, but I think it's more of a short-term thing. And even if there's any news about vaccines, I know that there's a lot of human trials out at the moment, that will give oil a huge boost, which could potentially take it to trading at around $50 a barrel. So this will happen, so if you are selling crude oil prices for the long term, that means you're betting against a vaccine, which I don't think is very smart. I am bullish on crude oil, but I do realize that in the short term there could be some potential volatile moments where we could see it trade back down towards 35. But as I mentioned in previous videos, that as long as we're trading above 35, we're trading in this like short channel between $35 and $41. And as you can see, we're currently at $38. So I don't really want to buy or sell here because it could go either way, 50-50. I would be willing to buy at around 36 to 35, and I'd be willing to sell around 41 to 40. It's as simple as that. Sometimes the best trade is no trade at all, and that is what scenario we currently have in front of us. So I will be waiting until I get the perfect opportunity where I can put my money to work.